Well, good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for one wild trading day on this Wednesday, the 12th of June, 2024, 5:50 p.m. Central Time. Starting off with the metals, now we're into the session for Thursday. You're down $17 in the gold, about 58 cents in the silver, 400-plus points in the copper market, and platinum down 9. What the heck's going on? Well, we'll get to that in a minute. First, let's take a look at a couple of things that deserve your importance. This is Fed Chair Powell's press conference highlights. Inflation too high. This is, by the way, how I put together my market letter. So it'll be bullet points that are in here, and I show you what's going on, and then I'll write a brief summation as to what it is, but I capture all the important things that went on with that. The other part that we want to do here is come back in this, and we'll see if I can do that for you right here. In the morning, to complement what we just had, we're going to get the PPI numbers at 7:30. The jobless claims are coming out at 7:30, and we're going to get the EIA natural gas numbers to come out. Remember, we got some hot weather moving through. But when you come back and you look at all this, here's what basically happened. The Fed has taken off, at least the members, and this can change. But right now, the majority think one rate cut this year likely for 2025. So they're looking overall, if you add it together, 1.25 point cuts that when they cut things back. And the timing of when they'll do it, very uncertain, and the Fed chair made that very clear. They were certainly encouraged by the fall in CPI today, and the members did get a chance to see it, and the dot plot did represent, after they'd seen the CPI, if they wanted to change their numbers, they did so, and that's all in where you're at. So now the question is, does the market need a cut? What's the economy doing, and where are we? Well, obviously, the Fed chair was encouraged, I think that's the right word, that inflation is gradually moving its way down. The economy is still strong. Labor is much more balanced than it has been, but the sticking point remains the housing market, which really hasn't given up an awful lot one way or the other. Those costs are staying sticky, and inflation is still the enemy, and where the pain's going to hit, and he said it, the lower income people in America are going to feel the inflation pain the most. The inflation numbers, while they're coming down, you're not seeing interest rates crash. You're keeping the 2-10 yield very close to 45, which is highly unusual, but it has stayed right in that 45 basis point area. And the question is, that puts the restraint on the economy. So when do we feel that? Well, maybe the CPI roll that just occurred was the beginning of that, and that could be the case. The stock market is priced in that the world stays perfect forever. It's priced in that you're going to keep the AI going, and that's carrying the day. Oracle exploded today in other markets. But let's go to the metal markets, because that's what we're here to talk about. You're still up in gold 1.34%. The dollar got hit, and you'll see that at the end of this, as the gold market rallied today. And gold got the inflation is there, slow, but there. And the Fed isn't rushing to do anything at this point in terms of slashing interest rates. We've really gone from the beginning of the year to what we were looking at, 1.5 points, 150 basis points of cuts at one point, maybe a little higher, down to 1. I mean, that's fascinating when you think about it. We're only 6 months in. Could things accelerate to the downside to move the Fed quicker? I imagine that the reports could do that. Was the Fed saying at any point, the Fed chair, well, now we've got this, we're getting closer? No. To a cut? No, no, no. He wants to see a multiple of these reports coming out. So I think 3 is the number you got to look at. Any wobble in the next couple of them, well, it could take away, and you don't know where you're going to be. So it's somewhere between, if you get a cut, September and December, but it doesn't look like you're going to get back-to-back cuts based on current information. When we look, we can see the gold soared. Well, why not? The dollar came crashing down on the CPI numbers, and it didn't do much recovery one way or the other after the Fed conversation and the statement, which there was nothing surprising in the statement at all. It was the dot plot, and the dot plot moved back. One rate cut is what the majority think, if you need one, this year. Lower highs, lower lows. Okay. So the challenge for the market is, can you get back up and over the 2369.60 level? Because right now what you have is a higher high, lower low. Everything got caught into Friday's jobs report that had that big move, and you've been caught basically in that since then. For the first 3 days, actually 4 days going on now, 3.5, including tonight in the market. You got down to the Bollinger Band, you held it, and you've gotten a bounce. Okay, you're oversold, trying to correct that. Anytime you have numbers, either of these numbers under 30, you're in an oversold market. The silver market continues to lose to the gold market, and once it gets over the 18-day average, retested it and came back above all this, well, until it gets back under it, silver's now the one that's probably weaker. And you see that in the chart action. The higher high, lower low. You couldn't get to the Bollinger Band. You're still in oversold territory. In the copper, in order for me to say that copper's ready to bounce in a bigger manner, you got to lose this embedded reading by it closing over 21. It hasn't happened. It's flirted with it. If we step back together here, let's go back just one more. This is the close today, and you were at 20.47, but that's not over 21. With the break today of another 400 points, you're now sitting here at about 20. Now, if you come back up later, maybe you get it lost. It's going to be hard to tell. In the platinum, you're into major support of the 100-day average in green. The gray is the 200, but you have an embedded reading. So yes, it's support, but if it rallies much, I think it gets sold by traders. So you've got to keep your eye on that. And this was the culprit today. I'll walk you back one here. This is how the market looked coming into today. You had gone from the lower Bollinger Band to the upper band. Neutral territory would be getting back to the 18-day average, and if you break much under there, the next support's the green line, the 100-day average. You tell me what went on there. It's pretty clear. You went to the 18-day average, and like glue, you basically stuck there. Now we're going to have to wait to see what the PPI does next to give us an idea what this market wants to do. But I think you look at it and you say to yourself, we have weakening inflation, not running down, but leaking. A tenth at a time, not bad, but it's going in the right direction. We have a strong labor market. The Fed thinks that there'll be revisions. I heard that word coming out of there. So they're looking for something to happen in that. Maybe this number was way too strong. And we have heard from government agencies that maybe that we were getting maybe 60,000 jobs a month for a couple of months that were too many. We'll come out and we'll find out what that means soon. But when you put it all together, got to understand the stock market's on its own world. It's a generational change that has taken place. It's like the first time you got portable phones. Well, that's what AI is to these markets, and how to monetize it, the winners will do fine. Apple again became the most expensive, well, let me say this, the most valuable company in the world. The contest is back and forth. This is a stock that was 165 3 weeks ago, and now it's 220. I'm giving you rough numbers there, but what's going on? So pay attention to all that's there. The metals are now sort of in no man's land. I think you can see that on the charts. Don't get excited about them when there's nothing to do. Maybe the PPI tomorrow will give you that something to do. And as I sit here and I work with you and we talk about all these different indicators, I don't know if you're aware of it, but we make this all available so you can learn these different techniques and get an understanding of what they are. In our guide to technical indicators, our volumes 1 and 2, they're really a PDF. They look just the way that you saw over there. I'll put that on again. You go to iraepstein.com, free offers, and they will show up for you. You can also move your cursor up here. Then you just fill out the form, we'll mail it. But it's going to deal with price charts. It's going to deal with chart patterns. I helped put a lot of this together over the years with our good friends at Modern Trader many years ago. It used to be Futures Magazine. And you put this there, and I have found this to be the best primer you can get your hands on. It's free along with our other offers. So go to iraepstein.com, free offers, take a look at what you had, and learn the basics, see the graphs, and take it from there. I'm Ira. I'll talk to you first thing in the morning.